All right, check, check, 1 2 1 2, audio, video, day trading radio. What's up, everybody? RPM with you for another Trader Spotlight Live. We're gonna have ChrisHall on in just a few minutes here. Let me get the ES chart up for us so we can track the ES today. Today is January 5th, 2012. Happy New Year, everybody. If I haven't wished you a Happy New Year yet, and it's right here, just a little bit after 9 o'clock. Getting started a little bit late tonight. Sorry about that. Just had to clarify some things with some people and get things set up technically and ready to go. And I want to welcome everybody in our chat room there. I see we got a pretty good full house tonight. And let me get rid of this 5-minute chart, and we'll go ahead and get Chris on. We're going to talk about some Thinkorswim features, which should be pretty good. ChrisHall is very knowledgeable when it comes to Thinkorswim, and I'm looking forward to seeing more of that myself. So we'll go ahead and get him on the line here. We'll go ahead and give him a call. Chris, if you're out there, if you can mute your show, please, if you're listening. And sure, new to trading. We do these things live. We want the live participation, absolutely. And we appreciate the members being here to give us some feedback and all. But also these things, we try to keep them as clean and as trimmed as possible for playback, because people like to watch these trader spotlights, over and over again, from YouTube or either from the live stream channel. And when they do that, we want to try to keep things trouble-free as possible. So I'm always trying to get all the technical glitches and everything taken care of, prior to actually starting the show. But for those of you out there that are watching live, we apologize for the slight delay here. And we're going to go ahead and give Chris a call, and we're going to get started. So here we go. Let's get him on here.
Hey, what's up?
Hey, Chris. How you doing, man?
Good. How are you doing?
I'm doing good. And Happy New Year to you and your family and all that good stuff and everything. I know it's a few days late here, but we're still in a new year, I think. So I think it qualifies. And you want to go ahead and shoot me over? You're going to shoot. I see you're typing right now. I'm going to get that team viewer share ID going. And you got everything set up on your side, Chris?
Yeah. The only thing I have set up is the Thinkorswim.
All right. Go ahead and get connected. And for those out there that have never used Team Viewer, it's a pretty cool product. You can do remote control from cross-platform computers, Linux, Macs, Windows, of course. And it probably runs on something else too. I'm not sure, but it's a pretty cool remote control and presentation type thing. So we use that a lot, and that's what you're looking at right here. Now I can go ahead and beef up Chris's output so the quality will look a little bit better for us. We're going to try to get it as good as we can. Now, Chris, you're using a Mac with a relatively small screen resolution. So what I'm going to do is I'm going to go ahead and zoom in real tight, so we basically have your full screen on our full screen, and of course we're looking at the Thinkorswim here. For those out there, let me just mention before we let Chris get started, let me just mention that Thinkorswim does run on the Mac, and I think Chris can pretty much attest to that. It also runs on Linux machines, because Chris also runs Linux desktop computers, and you have always used Thinkorswim, right, Chris? So pretty much runs.
I've used them for years. When Tom Sosnoff was with them, before TD Ameritrade even thought about buying them, I used them.
And you've been running Linux computers for your desktop because you're a Linux programmer, and and then you just recently moved over to Mac, and lucky for you, your platform of choice got to port right over. So that's cool.
Yeah, and also Interactive Brokers. They run on Java, which runs cross-platform. So,
all right. So, I guess we can call this part 2 of Thinkorswim. Now, we did a trader spotlight with Bry Guy I believe it was back a couple of weeks ago. I mean, it was last week, I guess, and he did a really good job with Thinkorswim. But this will be probably your third time doing Trader Spotlight with us, and we've been talking about Thinkorswim features and stuff. And I know tonight we're going to try to keep this an abbreviated show, probably try to keep it to about an hour. But I'm going to go ahead and just let you run with it. And I know there's some special stuff that you really feel like is important to share with us. So I'll let you go ahead and get started.
Alrighty. Well, first off, if you noticed right up in here where it says PM in green, that means I am on the paper trading account for Thinkorswim. I do have a live funded account with Thinkorswim, but for tonight's show, I am on the paper trading platform. So just because I actually put on some paper trades to try and explain some things to people of certain positions. So anything you see here, it's all paper trading. So let's get a poll. How many people actually trade options? And how many people probably use Thinkorswim doing it?
And of course, Chris is asking for the chat room feedback. And if you guys are listening to this, of course, from an archive show, you won't be able to see the results of that. So we're asking in our chat room tonight, and DayTraderRadios.com premium chat room. And there's Brian Guy saying he does options, and of course he's using the Thinkorswim. And it looks like Lilyfish, and it's Dollar Flag, new to trading, no. Durango. Okay. Yep, we got quite a few that are hanging out with us tonight.
All right. Well, what I'm going to go over, I already have a trade on that I put on a while ago because I talked to RPM about doing this show. So I went on ahead and just threw on some a handful of trades, and just to see, okay, am I going to be able to use something as an example? And this is a paper trading account. Basically, I want to try and go over the probabilities. Thinkorswim has a good probability and risk profile. Right here in the top, you see the Analyze tab. When I'm doing options, I'm either in the Trade tab over here under All Products and working with all the strike prices and the theoretical pricing calculator and things like that. But most of my time is spent here on the Analyze tab because I want to analyze a trade and know what are my chances of being profitable in the trade. I don't know how much I'm going to make. I just want to know what are my chances. So right now we have a calendar spread put on. Now a calendar spread, if you look down here, we are selling the 57.5 strike on the call side. We're selling the 57.5 in January, and we're buying the 57.5 strike in February. Now, when you sell a call, this is a positive theta trade. So you are collecting premium because you sold that call. However, you want to go farther out, let's say in the February, and purchase the same strike at a farther out date. That is called a calendar spread. So this is a positive theta position, and theta, as you can see right here, we are collecting $13.36 per day. And as we get closer to expiration, that call that you sold will lose its value. Therefore, you collect more money. So, but we are purchasing the same strike price at a further out date for protection, because if we didn't, then that would put us in a naked call position, and you don't want that. So this is a calendar spread if you people are familiar with calendar spreads. So on Thinkorswim right here, these red lines right here and right here are the break-even lines. Now, we are expiring on the 21st of this month. Well, actually the 20th. But realistically, it's Saturday that's expiration, but we can't trade on Saturday. So we are expiring on the 20th. So these red lines are the break-even. And what I mean by that is as you get closer to expiration, then your break-evens, let's back up. Your break-evens are right here. So if, let's say, HES, H-E-S, falls right here at 55.02, if it trades down to 55.02 and it expires, it'll be a break-even trade. If it expires, goes up to 60.25 and expires, that's break-even. So anything in between these two right here, we will make a profit. Your red line is your profit at expiration. Now, if I reset the parameters and reset the slices, the white line that you see here is your current profit. Now, as you can see here, we have $206 current profit. And now, what I want to know is, what are my chances of expiring in between my break-even points? So the main thing that you want to go to is the probability mode up here. When you are trading options and you're looking at the analyzing the risk profile, you always want to make sure it's in the probability of expiring. You also have probability of touching. What are my chances of touching my break-evens? But I want to go to probability of expiring. And right here, you want to make sure their probability date is set to the date that you're expiring, okay? Because so many times I look at this and I'm like, oh, it's not working out. Well, that's because I'm trading multiple months sometimes at expirations, and you always have to make sure that it is on the correct expiration month that you are analyzing. So the easiest way to tell this is to go right here where you see set slices. Now, you can set your slices to different things, but if you scroll all the way down to the second one at the bottom, you see break even. Now, you'll see 1/6, which is the current date because tomorrow is the 6th, and then you see right here 1/21 in red. What you want to do is you want to choose your expiration, which is right up here. So I'm going to go over that again. Make sure it's 1/21. Right here, the day after expiration, you want to set slices, go to break even. Don't choose the first one. Make sure you choose break even. Make sure you choose your expiration. So that will set it to your break even. Now, these numbers right here, this 26.86, that is at expiration with what the market makers are saying, okay, at this current situation, as of today, your probability of expiring right here at 60.25 is 20.86. Okay, for expiring down here, if the stock moves down, you have a 29.29% chance. So we have a pretty good, round that off, we've got about a 70% chance of being in a profitable trade. How much we will make, well, that's up to the market as what it wants to give us. So that is the easiest way of doing the probabilities. And you can do this with any trade that you put on. Let's say we want to do the IWM. Let's say we go right here. We're trading at around $74.98, let's say $75. So let's say we go ahead and put on a calendar. We go to the risk profile, and you look at it and say, okay, I don't have this trade on, but I want to know what the probabilities are at expiration. So you go to the date. You want to go here. You want to set slices. go to break even, and right here. That's probability of expiring. Make sure that's chosen. Your probability date. Make sure it's the 21st. Go to set slices, break even, and choose 121. This will tell you, okay, we're trading right at $74.98, I think. Let's say $75. So I've got basically a 28% chance on the upside and a 35% chance on the downside. So that will give you what the market makers are doing, because right here, if you look at Add Simulated Trade, if you look right here in the new feature that Thinkorswim did, right here in January, we've got 15 days to expiration. Okay, so the market makers are thinking, okay, we're going to have a $3.38 move within this month, within the 15 days of expiration. Okay, so that's basically, that's 338. So we go back to the risk profile. So they think they can move within $3. So that's 1, 2, 3. I mean, we could be out to 78. But, I mean, they're not always right. No one knows what the market's going to do and how much it's going to move. But right here, right by your implied volatility, you have plus 3.38. That's a new feature that Thinkorswim did. With the implied volatility, market makers are thinking, okay, we can have a $3 move. Does everybody understand how you can analyze your trades? And you can do this with any trades, with calls and puts, if you just buy a call and just buy a put. If you think, let's look at Amazon. If we think Amazon is going to move up to like, let's say $1.80, we'll go to the risk profile. So this is just buying a straight out call. And right here is your expiration line. That it has to move up within 15 days to 183.79 in order to break even. And as you can see, theta is working against you, but at expiration, there's your break-even point. So what are our chances of actually getting there? Well, we can go over to the 21st, set that, the probability of expiring. We can go to set slices, break even, and go right here. So it's saying, okay, 33.5% and then 66.5% on the downside. So that is with the current market condition. Does that make sense?
Hey, Chris. Yeah. How about that to the chat room? Anybody have any questions at this point? And if you guys are just joining us, I'm RPM. We're doing a Trader Spotlight live on DayTraderRadio.com. Of course, we've got ChrisHall with us. I'm going over some cool features of Thinkorswim. Can you please repeat that point about the market makers and possible 3-point move? So Braga wants to hear that.
Yeah. Okay. Yeah. Sometimes I kind of go fast with Thinkorswim, and you have to slow me down. Let's go over here to the trade tab. Okay, so we're over at the trade tab, and there's some really cool features that I like to use. Okay, one, when you go in and you type in your ticker, you have right here, you have this right up in here in the yellow where it says MMM. That stands for Market Maker Move. Now, all the market makers are taking in these orders. So with all these orders taken in, they're coming up with a plus move, plus 1.23. So they're not saying that Amazon's going to go up $1.23. They're saying with the volatility of all the orders coming in now and all the volatility out there, they're thinking that tomorrow Amazon is going to make a $1.23 move. That right there is a good feature to use. Now, if we go over here to January the 15th, and we click on January the 15th, when you go over here, you see 37.11%. That is your implied volatility. If you hover over that, that says implied volatility. If you hover over this, it still says implied volatility, but it says plus 10.85 in parentheses. What they are saying is with the market makers, with all the orders that they have and the volatility of Amazon, they are expecting a $10 move within January expiration, which we have 15 days to expiration. If you look in February, we have 43 days to expiration. That 43 in parentheses means 43 days to expiration. If we go over, we have a 46% implied volatility. We have a plus 22. So they're thinking that Amazon, the market makers, are saying, okay, we think there's going to be a $22 move within Amazon within 43 days, up or down. Does that make sense?
And of course, we're going to wait a few seconds for the reply.
Mm-hmm.
Always about a 5-second delay, I guess.
Yeah, I want to try and find one that's really volatile.
Mm. Braga says makes sense. Yep.
Okay. Okay. And also I want to show you guys. Okay, Goldman Sachs. There is no market maker move. Okay, it's not always going to be up there. I don't know why. I wish they would have it, but they just don't.
Chris,
but if you look like
there's CEO Trade for Pay is saying try CEO. Is he talking about try one that's volatile?
Yeah, CEO China National Offshore.
Yep.
Yeah, and the 15th we've got a 36% volatility, $196 stock. They're saying okay, $11 move within 15 days. Now, if we look at the chart, I mean, they're saying, let's say 200. So they're thinking within 15 days, this thing can run up to here. I mean, what was it? Yeah, 1174. Let's say $10. Whoops. So, I mean, they're thinking a nice move up to here, or 200, let's say 190, or right down in here.
Braga, I was asking you, could you go over how you took that over to the analyzing chart?
Oh, yeah. Okay. If you are within the trade tab, okay, let's go over to Amazon. Okay, and you want to do Amazon, and let's say, okay, we think we're going to have a move to the upside. You want to right click, and you can go buy vertical. But if you are on the trade tab, then you can come over here and you can right click anywhere in here. You can right click and you can go analyze duplicate trade if you are in the trade tab. That will put it right over to the analyze tab with this. Or you can go right to the analyze tab right here, click on analyze, click on add simulated trade. And then you can right click, let's say buy a vertical. You're purchasing the 175 and you're selling the 180. Then you want to click on risk profile. Does that make sense? How you get stuff into the risk profile to get your graphical view.
Now, Chris, does this? I mean, this works pretty much identically when you're using real money on the real money side, right?
Oh, absolutely.
Okay, cool.
Except for I think there's a delay in the feed, and also, to be honest, when you are in the paper trading side of it, there are bugs, things. It just seems like there might be a lag in the charts. The scan tool doesn't work very well. And And when I go over to my live account, things work better. They're not going to put their demo platforms, the paper trading money with Thinkorswim, on their good side, on the good network and on the good servers. I mean, so if people do have issues, if you're not trading with a funded account, then yeah, it might not work as well as you think it should.
So if you want to practice with Thinkorswim, you could do that on the paper side, just like you're doing now.
Oh yeah,
that works both ways.
Yeah, you can, and absolutely. And paper trade, guys. Shoot, I mean, I trade. I mean, this is a paper trading account. And actually, I forgot I put these trades on because I was managing 8 option trades with my live account. But always go out and paper trade some stuff. And I threw on some of these trades. And some of these trades like COP, now I'm down $35. Hess, I'm up 195. Starbucks, the SPY. You know, you can actually look at it and really understand the platform. Now, Thinkorswim, I don't think it's very user-friendly to learn, but once you do, it is an awesome platform for options, definitely. There is a learning curve. It took me a while. I've been with Thinkorswim for years. I've actually written my own custom indicators. So it's a powerful platform, but it is a learning curve. Something you're just not going to be able to pick up and just start running with.
I would have to say, from my own personal experience, that Thinkorswim is probably one of the most advanced trading platforms anyone could ever put their hands on. It can also be overwhelming. But I can't think of anything that they didn't put into that sucker. I mean, I remember at points, where I was thinking, wow, I wish they did this, and I remember bringing it up in the chat room, at times in Day Trading Radio chat room, and I would say, man, if it just did this or whatever, and then next thing you know, somebody says, hey, RPM, click this, click this, click this, and there it is. I'm like, wow, that's a lot of stuff in there. I see Big Al mentioning no delay on the feeds if you call in and request the real-time live data. So that's
even on paper. Even on paper. Huh. All right. We're going to go over another, let's see, 31. I'm going to write some notes here, 3180, and let's see, we have to say 3650. Okay. All right, what I'm going to do is do another probability. Let's say you're trading the stock. There's another tab, and this tab, when I first looked at it, it was so overwhelming that I thought my head was going to explode. And this is the hardest thing that I had to grasp on Thinkorswim, but once I did, I loved it. And actually, I didn't know how to do it until I started watching some videos with Thinkorswim. Usually around 11:30 to 2:30, they have Dan Sheridan, Don Kaufman. I think it's Don Kaufman on talking about options with Thinkorswim and how to use the platform. And I learned this trick from him. So, but if you go to the Analyze tab and you go to Probability Analysis tab, this thing is so overwhelming, it was crazy for me. So you want to know what the probabilities of being in the trade and actually hitting your target or hitting your stop loss. If you're trading a call, okay, you're trading a call, let's go back and let's say, let's go out to 43 days. Okay, $34. Okay, so I'm thinking Southwestern Energy is going to move up. Now, And if we look at, not think back, all right, if we look at Southwestern Energy, okay, and I'm thinking, okay, let's say we could move up, break through this monthly pivot, and we can move up to 36.65, or around, let's round it, let's say 36.50. But my stop is right here, this base right here, let's say 31.80. So what's my probabilities if I'm in a call of getting stopped out, or what's my probability of actually hitting this target before the call expires? Because we all know if you purchase a call straight out, if we look at the risk profile, you are paying out theta. So every day this thing does not move, you're losing money. I don't put on these trades that much. I am a premium seller. I like collecting theta, whether it's an iron condor, credit spreads, broken wing butterflies, calendars, certain volatility markets, if you're up or down, certain exotic trades work. So, and what they call exotic option trades are anything more than one leg. Right now, if you purchase a call, that's one leg. If you sell a call, that's putting on another leg, and then it defines it as an exotic trade. I don't know why, but that's just the way it is. So what's my probability of actually hitting my target of 36.50? So I want to go over here to the probability analysis, okay? And I'm just going to go ahead and just take this off, all right? First thing you want to do, you're looking at this graph, and this looks just really crazy, okay? And you got all these strike prices right in here. Okay, this is getting way too much. So what I want to do is I want to remove some of these out of here. All I want is a live one right here. So I'm going to go over here, and I'm going to right click, and I'm going to delete the slice. I'm going to come over here, right click, and I'm going to delete the slice. Now it's starting to get a little bit manageable. Now, instead of probability of expiring, I want to click on that and go to probability of touching. Now, as you can see, this right here brought it down to just one strike. Now, these arrows right here, you can move it up and you can move it down. Okay? So, here's this line right here is the expiration line. This line, this vertical line, is the expiration in January. This vertical line is the expiration in February. Okay, this line right here, I think is what the stock is currently trading at, 33.87. 33.65, I think. Yeah, something like that. I'm not sure. 33.85. All right. Right there, 33.85. Okay, so now, did everyone understand how I got to this point by removing all those slices?
I see Trade for Pay and everybody in the room talking about you can also, in the meantime, we're waiting for that. They're talking about how you can get a better commissions rate if you call Thinkorswim and tell them that you're thinking about moving. I would
yes.
Yeah.
Yes, definitely. Definitely, guys. If you trade Thinkorswim, don't pay market for the commissions.
Yep. The one thing that I would say, and it's based on user experience and the collective experience of everybody, which is great. I mean, we're pretty much, there's plenty of people that will say that you can get, like you're saying, you can get a better price. But I could see Thinkorswim making the argument that, listen, you're not going to get a better platform anywhere, so we're sticking our guns. We gotta keep our prices. But for the most part, I think people are able to get some better commissions if you make a good argument. So
yeah, they are, and like I was to the point where, okay, I wasn't trading large amounts of contracts to get a really good rate with them at one time. I was like, hey, you know, I don't want to trade large contracts. Sometimes I'm only trading 1, 2, 3, 4, 5 contracts. Sometimes I trade 10. You know, so, and my commissions were eating me up. So I called them up. I was about ready to switch over to Interactive Brokers. So I called them up and I said, hey guys, I've been with you for years. That's all I do is trade options. I was like, what can you do? Can you help me out on my commissions? If you give me better commissions, I bet you I'll be trading a lot more. And and the guy worked with me and lowered my commissions down so much that when I got off the phone, when I enter a trade now, I don't even worry about commissions. But if you're trying to get $50 and you're paying $10 per round trip, I mean, it's ridiculous.
And that goes the same with the stock trading, smaller amounts of stocks where, you're happy to get a $50 profit, and then they knock you over the head and take 20.
Yeah,
it is aggravating, but you can do better, guys. I know with my TD Ameritrade account, I pay $4.99. So now it's a carryover from the old Daytech days, but I made that argument that I should be grandfathered in. But there's so many other discount brokers out there. It's worth giving it a try. I think that's they want to keep your business. They want to keep your business, and if you can make the argument that, hey, look, you can go to Speed Trader and pay 39 cents for 100 shares, so.
Yeah, I mean, you can go to Interactive Brokers, and if you're trading trading a couple contracts, I think it's 70 cents per option contract. I mean, I'm not getting that with Thinkorswim, but I mean, I'm getting it to where it's worth for me not to move to Interactive Brokers because I do get the platform and I'm paying a pretty low commission. So, I am paying a little bit more than IB, but it's like, okay, but these options that I have and these features, it's like, okay, I'm willing to pay a little more.
Right. When you say options that you have, you mean exactly what we're looking at right here on the screen.
Yeah.
Thinkorswim is so powerful.
Yeah, the features. Yeah. Okay, so when you first get here, this is what it's going to look like. So to break it down, what we want to do, and you're going to be at probability of expiring. You want to come over down here where it says price slices. Click on that. If it's not showing, you want to right-click, delete the slice, right-click, delete the slice, keep the live one there. Come up here, go to probability of touching. When you click on that, now we have this right here. Now these right here, these numbers down below are your days. See right here, you have 115, then you have 116. These are the amount of days going out. Okay, and this white line is your percentage line. Okay, that's the percentage line. But I like looking down in here. So we got 43 days to expiration, and we think Southwestern Energy is going to move up. So what's my chances of? Okay, and then I'm just going to click inside here and you can just type it in. So let's say my stop was 31.80. I hit enter. So what's my chances of of it touching, probability of touching the 31.80? Well, in 15 days, you have a 52% chance of it touching. Okay. In 43 days, you have a 71% chance of it touching. So that's my stop. So what about my target of 36.50? If I say 36.50, well, within 15 days, I got 32% chance of it touching. In order for this to work, you need a stock that has good options, good liquidity, good open interest. Something that trades a lot. And not all stocks have options. Okay, so this isn't going to just work on if you're swing trading the stock and you try to use this and it doesn't have any options, you're not going to be able to use it. Okay, and these numbers change. These percentages change because these numbers are derived from all the information that the market makers have. So these percentages will change daily. So what's the chance of me getting let me delete this again. Delete this, let's say, probability of touching. Okay, so we're trading at, let's say, 33.64. All right. So what's the chance of me getting $1 out of this trade? So getting $1 out of it, I got a 72% chance of getting $1 in 15 days. That's pretty good. You know, what are the chances right here, if you look right in here, within, let's say, 5 days? What are the chances? So if you look right here, within 5 days, if you look there, you've got 15.8. So let's just say 15. That right there says, okay, that doesn't mean, let's go up to 5 days.
Chris, there's a question for Brian again. He says he's got 100% across the board on those months. Is that because he's on a live account, maybe?
No. You got 100% on those. Are you changing the strike price down here?
And again, that silence is because we have to wait just a few seconds for that answer in the chat room there. He says not yet. Mm-hmm. Yeah. He says not yet. Brian says.
Yeah, this strike price you have to change in order for those numbers to change. See, if you go to that strike price and you're at 33.64, you'll see 100% because you're at the price.
Hey, Chris, I was just curious. I was going to ask the chat room, just curious if anyone else out there that uses Thinkorswim, that uses some of the the probability analysis tools in Thinkorswim. If you had any, if they've had any good luck, how does it work out? I mean, is it reliable? I mean, how about you, Chris? I mean, are you finding that that it's working in real life?
Yeah. Yes, I do use it. It's not the Holy Grail. So, when you look at this and say, okay, it just gives you what are the odds in your favor. Because we can't predict the future. We can only do an educated analysis of the data we have now. It's just like playing poker. A professional poker player does not know what his next hand is going to be. However, he does know the game, and he can look at his hand and say, okay, if I play this hand, I've got a 30% chance of winning. So am I going to bet a lot of money? No. If he's got a 70% chance of winning, because he knows the hand that he has and the probability of all the other outcomes of all the other players, then he's going to bet more. But he just doesn't know because he can't predict the future. So, and this is what this is. It just gives you another tool in your toolbox. That's all it is.
Do we have any idea how they're doing this? I mean, what's the most of the root of the basics of the calculations, or how they're doing it?
I don't know the algorithms that they're doing, but what they're doing is they're taking all the information that the market makers have, because Thinkorswim gets all, I don't know how many ones that they gather, but they gather quite a few of them, and then that's how they derive all of this on their platform. But I'm thinking they're taking the implied volatility and all the order flows that are coming in, and that's how they're deriving from this analysis right here.
Is it? I mean, are they using also, history, previous? I mean, are they looking back testing? To look at what's happening. I mean, is that factored in there in some way? Maybe.
I don't think it's back testing. I think it's, well, I mean, it is taking the past orders that have come in the implied volatility,
right,
and all the orders that are coming in. And I think that's how they're deriving from these, from what the market maker information that's given to Thinkorswim.
Right. Trade for Pay saying that it's using one of the option pricing models, and then Big Al's comment is that he uses the risk profile a lot.
Yeah, right down in here. You can have the Black-Scholes model, binomial model. I don't think you use that. I think that's for European options. I could be wrong. But, I mean, you can use the Black-Scholes model, and or you can use, let's see, this one here.
Now, you could use this for like a standard swing trade too, or whatever, right? I mean, you're basically the same data you could apply to a standard stock if you wanted, without playing the option, right?
Yeah, you can. Let's say someone give me a stock that they're looking at swing trading.
Intel, INTC.
Okay, INTC. So let's look at Intel, INTC.
I'll tell you what, even something better if you want. How about SWHC? I'm a gun nut.
SWHC.
Yeah, and your screen is frozen again. Let's see if I can refresh that by... There we go. All right. We're good now. Go ahead.
Okay. So the first thing I'm going to look at...
of course, this thing's doubled in the last 2 weeks. I think a report came out that the FBI had seen record background check requests, and a bunch of sporting goods stores and everything were saying that this, for the holiday season, 2011 holiday season, there was record gun sales. But so that kind of caught my interest with this one because I'm kind of a firearms guy. I like for a hobby. So having to take a look at it, I noticed the thing is it basically more than doubled, just recently. So I'm just curious what this thing would say.
Yeah. So let's get rid of these slices right here. We're going to delete this slice. We're going to keep the live one. We're going to go to probability of touching. Okay, so from what it's saying, okay, is there going to be a dollar move upward? Okay, within 15 days, there's a 31.67% chance it'll have a dollar move to the upside.
Now,
what about
on a $4 stock? That's a pretty good move.
Yeah. Dollar move to the downside, 27.64% chance. So the odds are in your favor that more than likely it'll move up.
Right, but you don't have to pull a dollar out of it. I mean, you change your is it always, you always look at, can you change that to, like, instead of, well, you got to look at the price, right? I was thinking of a percentage move, if you could think of a percentage move, but because a dollar on a $4 stock is 25% move, it's pretty heavy. It's kind of, what would you call it? Ambitious.
Yeah. I mean, chances of it hitting $5.
Yeah.
75.62% chance.
And that's within 15 days?
That's within 15 days. Within 43 days, you have an 84% chance.
Wow. Be interesting. Let's look back on this thing and see if it makes it to 5. What's the current price at right now on it?
I think it's like 472.
Yeah, so that isn't really that huge of a move from 472, but
No. And also another thing that I want to show people, instead of going to the risk profile here, like let's say we go and we want to purchase something. Let's say, I think it's Oracle that I was looking at. Yeah. Okay, let's say like Oracle. This is what I'm looking at. I'm looking at Oracle. And with the stochastics is oversold, it's crossing back over and it's pointing back up. That's the one thing that I've learned through John is trading the full stochastics or the slow stochastics. But also right here, these lines right here are pivot point moving averages that I wrote for Thinkorswim. So right now I'm looking to get into Oracle, okay? So, and I want to try and do a call. There's a thing called theoretical pricing. Now, if you go over here, instead of looking like right here, instead of like, let's say, okay, I'm going to buy the call, and then I want to go over here to the risk profile. Okay, and then I come over here, and let's say we move up to $27, then you know you have $16.60 move, or you can come down here to this wrench, and you can say, okay, if we go up to $27, make $16, okay, minus commissions. Okay, that's one way of doing it, but also a quick way of doing it is going over here to the trade tab or to the analyze tab, to the add simulated tab, anywhere right here. If you go to the trade tab, go to all products, and we're going to choose the 15 days, but right here you want to go over to layout. Sometimes I have right here open interest. So I look at open interest. Is a option liquid? As you can see, 18,000 open interest for a 27 strike. If you look at what's Smith & Wesson again?
That was SWHC.
HC. Okay. I mean, look at open interest. That thing's not even liquid enough.
Well, you still got Oracle in there, right?
No, SWHC.
Well, why is that not updating? I still see ORCL in there. I think something weird going on with TeamViewer. Let me refresh.
Yeah, I'm running the beta version.
Let's see here. Pardon the. Yep, they were right. They were saying that we were having a hard time, that just your whole screen wasn't moving. We were seeing your mouse move, but we weren't seeing the actual what you were doing there. So I apologize for that, guys. All right. Get to it, buddy. Sorry about that.
All right. Okay, so if we go to SWHC, as you can see right here, open interest, there's nothing there. It's not liquid enough for me to even think about trading it. Well, plus it's a $4.72, $4 or $5 stock, so just buy the shares. Well, if you look at Oracle, did it switch over?
Yes. Yeah, pretty much instantaneously.
All right. So if you look at the open interest here, it's like 4,500. It's like 5,000 for the 28 strike. I mean, you can get in, you can get out. The bid and the ask is 83 cents for the bid. The ask is 85 cents. This is after market, so you could probably get a penny. I mean, you know you're going to get filled, and you know you can get out. And that's the one thing that I look at. But if you want to know what you're going to make, if you're going to just buy a call. So let's say I just want to buy a call, and then I hit and buy that call. You could go over to the Analyze tab and analyze it, but you can also go here to your layout and go to your Theo price mark. So the Theo price is your theoretical pricing for these options. Right in here, you have your date, you have your stock price adjustment, you have your volatility adjustment. Like you can see what's going to happen to your options if volatility goes up or down. You can see if the stock price goes up or down, If the date, as you get closer to expiration, what is it going to do? So you want to look at your Theo price here, which is 84. Okay, your mark is in between your bid and the ask. And usually when I throw in orders, I never pay market price. I try to get in between the bid and the ask. Okay, I just try to get a pretty good price for it. If you throw in a market order, yeah, this market makers would be like, thank you, have a nice day. So, and also if the spread is like a 10-cent spread, you're going to be already $10 in the hole within one contract as soon as you open it up and get filled.
Cool, man. All right. So, any questions out there for Chris? Anybody in the chat room? And we'll wait for those questions. Want to go ahead and thank Chris. We've got about an hour into this thing. On this January 5th, this Thursday, 2012. So if you're watching this from a playback, we appreciate you watching. And for those in the live in the DayTradingRadio.com premium chat room, we appreciate you you guys watching and listening tonight. And we'll see if anybody, you see any questions there? There you go. There's one from Voidwit. So it says, so if there is a spread of 10 cents, you buy order in the middle. Is that what he's asking?
Well, that's where the most I probably want to pay. I can probably go even a little bit lower and see if you get filled. And let's say you want to put on 10 contracts. You just don't put on 10 contracts and try to get it at a pretty decent price. Let's say if it's 10-cent spread, you try to go down and try to only pay maybe 3 cents, like 2 or 3 cents. And if you get filled with one order, then you can go ahead and throw in 9 orders and try to get filled that way. You want to see, okay, how liquid are people buying up these calls or these puts or whatever. I just like to test the waters sometimes if I'm going to go in heavy. And I usually do that when I'm doing intraday trades, when I'm doing day trades with options. Because I do day trade options, I just test the waters. You're like, okay, can I get filled pretty quickly? And if I do, then I throw in the rest of my order. But this theoretical pricing, right here, if you look at theo pricing 84 and you got a mark of 84 cents, let's say Oracle goes up. Let's say you want to see how much value is this option going to be if the stock moves up, let's say 25 cents. So you type in 0.25 and make sure it's in the plus side, plus 25. Right here you have the mark of 84. So if it moves up 25 cents, then you can sell it out in the market for 96. So you make, that's how much profit you would make, the difference between the
84 and 96, yeah.
So
yeah, I heard you mention, that in the past that one of the things, even though Johnny doesn't trade options, DayTraderRockStar doesn't typically trade any options. You do use his watch lists and his scans, and that he comes up with his watch list and his education and everything. Often you use those, and you decide instead of taking the common shares with the same trade, you decide to play the option side of it. And
yes.
I think that's very, very interesting. Because it's just another way of having some leverage on the basically the same trade, just in a different way, but using that the great watch list and that high probability of those trades that Johnny brings to Day Trading Radio, and exploiting that in an even different way, using the options and
you have to check to make sure it has enough liquidity in those options to trade them.
Right. And a lot of his stocks do, because they're good, well-known, high-quality stocks. A lot of them I would imagine. And there's other people to do that too. There's a lot of people in Day Trading Radio chat room that trade options off of a lot
like
of the
pot.
Yeah.
Like pot. He was trading potash. So let me go ahead and reset this. Can everyone see this? The switch over?
Yep, it switched.
Okay.
We are looking at pot now, right? Yep.
Yeah. So let's say we got 15 days to expiration. Let's switch over to January. We got 15 days to expiration, okay? And let's say pot. Let's say we look at pot and we look at active trader and say, okay, it's starting to move up. I think he got in, well, let's, yeah. So let's say pot, we got a mark of, let's say with the 43 strike, we got a mark of 112. But the first thing I want to look at is volume and open interest. Open interest, yeah, good open interest, pretty liquid. So I can switch over, go to Theo price mark, and say, okay, let's say pot is $43. We got a market maker move of 0.88. So the market makers are thinking, okay, tomorrow it's going to move around 88 cents. But within 15 days, they're thinking it's going to make a $2.86 move. So let's say we do think it's going to move. We go over here to the stock price adjustment. Okay, so let's say it's going to move $1. Okay, now if you bought it at $1.12, now that option is worth $1.66. So you got yourself a pretty decent profit. However, you need to look at the date as well. Let's say it takes us till, let's say Monday to get that move. Now, let's round it off to $1.10. Let's say we bought it at $1.10. And then you can sell it at $1.50. That's a 40 cents. So one contract equals 100 shares. So you would make 40 cents, which means you would make $40 profit minus commissions. And the good thing about it is the max that you can lose is what you paid for that option. So that's basically defined risk. It does not allow you to just buy potash and hang on to it for 6 months to a year and say, please go up, please go up. Because it's done. You're done. You got 15 days to make money. You're done.
Do you find that trading, because I know you have traded common stock before, and you've also, yeah, and you've traded some futures before, but the difference with the options, do you find because it does pressure you to make sure that your trade is pretty much wrapped up and done, just by the fact that the things expire? Do you find that it makes you more active and more involved in watching your trades more? Or I mean, at the very least, they're going to be shorter time frames, right? So do you find yourself looking for faster movers because you're worried about the what do you call it, the decay? And
yeah, I mean, when you're purchasing. See, when we go over to the monitor tab, and these are calendar spreads right here for Hess, my theta, right now, for these 4 trades I got on, my theta that I'm collecting is $9, $12, $11. Okay, I'm -1 on that. Okay, but theta for all these option trades right here in the paper trading account, I'm collecting $31.87 per day. Okay, so that is me collecting theta. That's being a premium seller. That's good. But you also need to be right in your direction when you're doing that sometimes, or you don't. It makes you really think about your analysis. You have to have a trading plan, especially, and I'm getting more into trading these weeklies. And also, I'm getting back into swing trading the calls. Okay, so it makes me adhere to my trading plan. I have a trading plan. And if it meets that trading plan, and I have a scan that I scan each night and stocks set up. And then I look for it. And one of them is the stochastics. It has to be setting up properly. but it makes me adhere to the trading plan.
So I guess you not only do you look at targets for pricing, price level targets, you're also always looking at timing, and everything has to be figured in there. So there's more things that you have to keep track of, and more things have to go right for your trade to go right. Mm-hmm. But the potential for profit is versus your risk.
Yeah. So I mean, and let me run through this. And this is a hypothetical trade. So anybody can trade looking back into the future, looking back into the future, looking back into the past.
Right.
Okay. So let's look back
to the future. That was a movie.
Yeah. Okay. Let's look back. Okay. So we've got like pot. Okay. It closed above the pivot point moving averages. So stochastics is crossing back over. So I would jump in at 1220. Okay. So I would jump in here and then look for a move upward. So let's go back, and this will show you the potential that you can make. There's a new option here or feature called Think Back.
Oh, that's cool.
So let's go to pot. Okay, let's close this out. Let's go over here. Let's go to the 20th. Okay, this right here is telling me, okay, I'm thinking back of pot on 1220. So I got 3 days to expiration on the weeklies. Usually with 3 days to expiration, I don't even trade those because I do like trading weeklies, but because you got 3 days to expiration, you can go ahead and purchase this right here at the 42.5 strike. You're risking $7. But if you look the next day, you're losing $2.50, and on the second 1222, actually this one worked out pretty good. Okay, so we bought it here and we sold it right here on the 23rd. That day we sold it on the 23rd. I mean on the 22nd. I'm sorry, on the 22nd. We bought it for $7. And now you would sell it that day and you would make a $34 profit off of risking $7.
I keep having your screen
freeze.
Refresh. Yep. What happens is your mouse moves and you're pointing at stuff, and then I realize you're not pointing at a chart. You're pointing at the tables and the pricing and everything. It's okay. Yeah. It's okay. We're good.
Yeah. So, okay. Now let's go over to January. Let's open up some strikes here. Let's go over to January 31st. Okay. So we think pot's going to move up because I look at the trade. I'm over here on 1220. So it's meeting my criteria. So I'm thinking it's going to move upward. Now my stop would be down in here around 38.44. Okay, but realistically, when you enter this trade, okay, you enter this trade at 41.67 at the strike, and you purchase it. If the stock goes to zero, the most I would lose per contract is $100 and $106. Mm-hmm. It's defined risk.
Right.
You can't hold on to a loser. Okay, so that's just the one thing. That's the good thing about trading calls is that, you know, people aren't going to just hang on to losers. I mean, because you got 31 days to make money.
Right.
So, and I think it's going to move up. So I went on here to the 1220, but then I go down here, and then I move it up to the 21st. Okay, well, I'm losing $9.50. Okay, big deal. I'm risking $106. Mm-hmm. Okay, so then on the 22nd, okay, as you can see on the 22nd, we had a nice pop. Mm-hmm. And if you come back here and you look at the 22nd, you are risking $106, and if you sell it, you would have made $112. If you have a trading plan where you know where your entries are, you don't know where your target's going to be, but you know the thing is going to move within a few days. Okay, you can have defined risk, and the probabilities, if the probabilities are in your favor, and stocks move, because stocks that John gets into, they're going to move. His 10 per 1,000 watch list, they're going to move either up or down.
Yep.
Okay. Yeah, stocks do sit there and do nothing. You know, big deal. Who cares? Okay. But also, you want to look at stocks that with a beta. Okay, this has a beta of 1.23. Okay, that's pretty decent beta. But this is where you make your money in options, and you're risking $100. So if you are willing to risk $100 to make money, but you don't know how much you're going to make, but here we would make $112, you have defined risk. So if you put on 10 contracts, you would be risking roughly $1,000 to make $1,000. Mm-hmm. Okay, so this is where I get into trading, and I do it intraday trading as well. So,
well, I guess that about wraps it up, right? Unless there's anything else you want to cover.
No. Whenever you guys want to look at just go to the think back and think back and see what happened. You can right click and you can say, okay, I want to buy a vertical. Let's say we did a vertical on this. So you buy a vertical, okay, and within 2 days, what would you have done? Okay, it would have cost you, your debit is $72 to put on the trade. You would make $43 profit doing a vertical. Mm-hmm. So, hey, there's, you know, do your think back, look back at this and see, and play around with it and see what you can make.
There's Captain Blocart there says, Stata decays on a daily basis. Does the TOS recalculated probabilities as the Greeks change throughout the day?
You know, I really haven't looked at it throughout the day. I've looked at it as say, okay, what's the probability analysis and stuff, and of me making money. I try and look at it in the morning. I only look at my option plays. I don't sit there and watch them. Well, unless I'm actually intraday trading, day trading options, I'm glued to the screen. But if you're swing trading options, I don't know. I know they change daily. So your probabilities, like you go to the probability analysis, is going to change. And if you go to here to the risk profile, if we look at Hess, or if we look at Starbucks that I have on a trade here, a calendar, and then I did an adjustment on the calendar. You know, those probabilities, if you go up here, set slice, break even, you know, those probabilities, if I come in tomorrow, I'm sure those probabilities are going to change. So, yeah, they do change day to day. But the first thing I look at when I'm trading options is I go to the monitor tab right here to the 4 Greeks, delta, gamma, theta, and vega. I find out, okay, what's my theta? What am I collecting? My delta, you know, the rate of change. So if it moves up or down, you know, how much money am I going to be losing? The gamma, the rate of change of the delta, you know, your vega, your volatility. You know, understanding the Greeks is something that is a must for an options trader. And I've got videos out there for the Greeks out on YouTube.
There's a question in the room there. Stock Pilot saying he's having a hard time getting the broadcast to stop buffering. Just a quick call out in the room there. Everyone, let us know if everything seems okay. Audio good, and want to make sure that everybody was able to hear us during the show. Of course, this is being recorded, and we'll post it to YouTube. And having said that too, Bry Guy did a real good show with us the other night, and we just need to go through and edit a little bit of that show, and we're going to post that to the YouTube as well. Great Thinkorswim education, Chris. I really appreciate it. And
hey, no problem.
Yeah, man, it was fun and informative.
Yeah, anytime. The best thing I can say is get a paper trading account and play with it. That's how I learned.
Cool.
Just play with it.
Cool, man. Well, let's go ahead and say goodbye to Chris. And Chris, thanks again, and we'll see you on the other side. And I know me and you got some projects we're working on and trying to get finished up. And but we appreciate a good solid hour and 15 minutes. It looks like on Trader Spotlight Live. And Chris, I'm gonna go ahead and sign off on your machine there. And we appreciate it again, man. I really appreciate it.
Hey, no problem. And we'll try and test this thing a little bit more. I'm using the beta version of TeamViewer, so I'll see if I can get it. We can get a newer version or a non-beta version for the Mac. And
there's a presentation mode for that thing too that seems to work pretty well.
I need to find that.
Yeah, it's the same product. It's just it's built into it. It's one of the newer versions, so that might be something that me and you could try, and we'll do this again.
Definitely.
We appreciate it, Chris. Take care, man.
All right, you too.
All right, bye. All right, so ChrisHall, all about options on the Thinkorswim platform, about the probability analysis, and just more feature-packed parts of Thinkorswim. We've got so many members that use it. We're not, necessarily a TD Ameritrade advocate. I think most people can say that it's a quality broker. I think most people would say that the Thinkorswim platform is a quality platform, one of the most feature-packed and feature-rich out there. Regardless of the competition, you'd have to say that all these things that I've just said about TD Ameritrade and Thinkorswim is true. It does have some downsides. It is one of the larger retail brokers out there, and they're a little expensive. But we have to give credit where credit's due, and it is a pretty awesome platform. So, that said, consider it. If you don't have it, you could consider it. And if not, maybe you can still gain some of the knowledge from some of the Thinkorswim shows and apply some of that knowledge, while using your regular platform and broker that you're used to. So, with that, guys, I'm going to go ahead and sign off here. And again, this should be recorded, and we'll post this to the YouTube channel and available for everyone to watch. And of course, this is January 5th, 2012, and we've just rung in a new year, and looking forward to more time with Day Trading Radio Premium members. If you're not a member of DayTraderRadio.com, please consider it. ChrisHall is just one of our members with so many that do these spotlights, and we really appreciate it. On behalf of Day Trading Radio, this is RPM calling it a night, and we'll see you on the other side and in the markets tomorrow. Take care, everybody.